with the CEO and co-founder of TMRW and Aditya Birla venture, Mr. Prashanth Aluru, to kindly come and join us, please. A big round of applause for Prashanth. Joining the conversation would be Ritu Sharma, our Executive Director, TIE Bangalore, to kindly come and join us, please. Well, she's handling a lot of things, but finally she's on stage. A big round of applause for Ritu Sharma, please.
Hi, good afternoon, everyone. And after every investor panel, we see a whole flock of people walking away.
Yeah, it's hard to follow that, yeah.
We had the
I should have
same
brought
thing
some
in
checks.
Yeah, exactly. But in the interest of time, and we are running late, and obviously we have two other very interesting panels on this. I'm going to jump right in. So thank you, Prashanth, for joining us. And our session is very different from what's really happening, in the space of D2C. So I'd like to talk a little bit about the origin of tomorrow, right? So we'll start at the beginning. So, this, at a time where D2C, in the ecosystem is really obsessed with growth and, growth has to be at all costs. And tomorrow really made a very fundamental change, right? I mean, by building a house of brands. So I'd like to understand in terms of what was that thought process and that insight behind that thesis, and why did you believe that that was the right model for India?
Sure. So I think just to introduce tomorrow, we are a house of brands in fashion. We're backed by the Aditya Birla Group, but I came in as a founder with $50 million of seed check to begin with, which was a privilege to have. And back then, of course, there was a lot of models coming to India in terms of brand aggregators, taking seller labels from marketplaces to become brands. We felt the real opportunity was to build brands from a longer term, enduring brand mindset or the brand building mindset. And in some ways, to your point, most of the funded startups were chasing growth at any cost and almost building vanity metrics to get to the next round. We felt, the opportunity was really to build brands for the next generation, not just from a next gen brands getting to leadership, but also solving for the young India, right? Gen Zs and millennials, which of course were not any longer adopting brands from the previous generation. So, and I think if you look at Aditya Birla Fashion, they've been leaders for the last 3 decades in building brands for a slightly older consumer, but with an offline first business model. We felt there was a very large opportunity to take a 10-year view or a 30-year view, not a 2-year view, and build brands which were truly the next generation of leadership brands, and hence the name tomorrow. It's today's brands becoming tomorrow's leadership brands. And back then, of course, if you look at fashion, at least our category, fashion, lifestyle, to one of the questions earlier, there were only about 25 brands which had crossed the 100 crore threshold. Not that 100 crores is an important milestone from a size, but it just tells you that is there a breakout potential to become a large brand over time. Of course, there were a few standalone brands which were well funded by venture capitalists and which were doing quite nicely and could have had a very good journey on their own. We felt the house of brands model fundamentally made sense because we could invest horizontally in capabilities that mattered for fashion and also bring in a tech-led business model, which is, we were always very clear that new age brands have to build quite differently from traditional brands, and investing in deep tech capabilities and now AI for a single brand is much harder. And if you do it horizontally, it's a much easier scaling path. In our portfolio today, we have some brands in the 100 to 150 crore zone and some brands in the 300 crore plus zone. The journey for a 300 crore brand going to 1,000 crores and becoming a lifestyle brand over time, or a 100 crore brand becoming disruptive and getting to 500 crores, both require a fundamental step change in capabilities, which we didn't believe was possible if you just focused on one brand. And of course, in fashion, while Aditya Birla Fashion is not called a house of brands, but in many ways they are. And globally, there are many examples from really marquee brands which have been scaled in a house of brands portfolio. But the way I think the brand aggregator philosophy came to India, I think fundamentally we never believed in that. We felt, yeah, there is a label to brand journey, but few brands, big brands, focusing on one vertical, and that's why we chose fashion, which was closer to home for us, given the backing from Aditya Birla Fashion. We felt going deep in one vertical, solving uniquely for that vertical, solving for young consumers, taking a tech and AI-led approach to scaling is the only way to, and today, just to give you a sense, we are roughly $150 million scale, which is close to 1,300 crores across 6 brands. And each of them have had phenomenal growth. Not only growth, but to the discussion earlier with Kaval, good unit economics, which fundamentally create a viable path to scale. There's no point chasing bad growth and getting to the next round of funding.
Yeah.
And today we've raised close to $200 million of funding. But we've deployed that with a lot of, I wouldn't say frugality, but capital efficiency at the core of the mindset, right?
Yeah.
And of course, Mr. Birla, who's built really large businesses over time and is now also investing in new businesses like Birla Opus and Indriya, takes risk appetite at a very, very high level, but with the notion that eventually companies have to make money, right? I mean, there's no point being a large brand if you can't make money, right?
Sure. It's great because it really kind of very organically dovetails into the next question, which really talks about, so when a brand joins tomorrow, how do you help them kind of, take them to scale in terms of, is there a repeated playbook that you follow or anything specific that you kind of, what's that differentiator?
Sure. So I think one of the advantages we have is a singular focus on one vertical, right? I think if you play across so many categories, then you would not be able to solve for any of them. So one of the advantages you have coming into our portfolio is you have access to the entire end-to-end view of the fashion value chain. Just as tomorrow we've invested deeply in multiple horizontals, along with a fully central tech and AI team that you have access to. But the playbooks are quite tailored to both the channel and the distribution footprint you're building for, which in fashion, of course, is Myntra, Jio, Flipkart, Amazon, all the way to now quick commerce channels. Equally, it's also very specific to the category nuances, or like Kaval talked about different customer cohorts. In our portfolio, we have some Gen Z focused brands, which are very different to millennial focused brands. Some brands are far more premium and some brands are far more affordable. So I think the category nuances also define what kind of capability do you need, right? On design differentiation, product innovation, ability to launch new categories, building new distribution channels all the way to offline, omni, and now quick commerce. So that's what the horizontals bring to you, which you sort of get turbocharged because you don't have to build it from scratch. If you, let's say, raise $5 million with a venture capital fund, you only have access to $5 million of capabilities, right? Simplistically put. And the tech and AI piece, which of course we'll touch upon briefly, is another big source of moat, right? I think learning from the likes of Shein globally to many other new age brands that have been tech-led from every aspect of how the business is wired. I think that's the one place where we've gone very deep in building IP around solutions which matter for a fashion brand or a lifestyle brand. And that's another big source of what really delivers value from a playbook perspective.
No, that's great because I think while organizations are kind of taking that route, but this is the first time we're really going deeper into those conversations. So I'm going to talk about the differentiation advantage, right, which you just spoke about. You touched upon technology, AI, as tomorrow's real moat, as they call it, right?
Yeah.
So what are the actual capabilities driving outsized leverage today? Because if you technically look at it, while operational, in terms of scaling,
Yeah.
from an operational perspective, it isn't enough. I mean, the real advantage really comes from what sits underneath.
Sure.
And so how is tomorrow really kind of, what are the leverage points there for brands that are under your wing?
So of course, a tech and AI IP that we've built horizontally as a House of Brands platform is in many ways horizontal, but in many ways specific to fashion. And I'll just maybe first touch upon the fashion specific capabilities and then some which are broader than fashion. I think if you look at fashion as an industry or a category, right, it all starts with, of course, trend spotting, demand sensing, being able to innovate on product development or product innovation, design differentiation. So some of our capabilities around tech are really around doing design differently or doing product innovation differently, thinking about agile supply chain, which is low lead times, low MOQ kind of supply chain getting built, all getting powered by an underlying tech backbone and a tech brain. Of course, the brain comes from both traditional data science, but also AI, ML, and now Gen AI. If you look at something like design, design, of course, you have to do a lot of original thinking, but you could also take a lot of tech-led approach to how do you think about trends in design for a fashion kind of industry. So we have products like, we've launched multiple in-house products, which our brands have access to. We're not a SaaS company, but end of the day, a lot of our capabilities almost look like a SaaS or an AI company. So we have a product called Foresign, which lets you do trend spotting better. We have products like Vogue View, which looks at in terms of what's working for you on different channels and different distribution uh, points of sale, what aspects of fashion are today doing well with the young consumer, so that you can double down on your bestsellers while you continue to innovate on new launches. So that's one end of the tech capability. The other end of the tech capability is all around planning, pricing, and marketing spend optimization. For a digital first brand, of course, all of us in this room know that one of the biggest sources of investment is Meta and Google and performance marketing all the way to brand marketing. And how do you optimize on your pricing calls? How do you optimize on the marketing spend of ROI is the other area we've invested. The third leg is around distribution, right? Soon as a digital first brand, which is also expanding into offline, your channel footprint becomes extremely complex. So how do you think about inventory at scale across distribution channels and really optimize the inventory across the country is another source of supply chain optimization. And the fourth big one is, if I look at tech itself as a capability, is of course in the last 2-3 months there's been so much progress that AI within tech itself is moving at breakneck speed. Like, a lot of our now coding has moved to maybe 60% AI-led and 40% human-led. A lot of the prototyping on solutions is now becoming completely AI-led. Our product managers are able to build without a single engineer. So I think building faster is also becoming another area where the AI moat, and horizontally agentic AI across every business process, whether it's front office, middle office, back office. We're looking at really taking the automation to the next level. And last year we had raised our first round of external funding with ServiceNow Ventures. And one of the reasons to do that was to really take the agentic AI capability to the next level. On Gen AI, of course, we work with all the platforms, whether it's Google or Cloud or OpenAI. Right. But we're building solutions which are tailored for fashion.
Fantastic. Which brings us to perhaps the largest shift that's happening in the consumer, within the consumer itself. So let's talk a little bit about where consumer growth is really headed, right? And what does the future lens hold? So consumer behavior, as we know, is really evolving fast with quick commerce, AI-led personalization, changing discovery patterns you spoke about, and also shrinking attention spans, right? I mean, today,
Sure.
Brand loyalty doesn't sit the way it used to sit earlier. So how do you see the next chapter of the consumer brand building unfolding? And, how is tomorrow really preparing for that change?
Maybe I'll just break it down into 3 parts based on the 3 themes you've called out. One, of course, the engagement and the marketing or the brand building effort. There was a lot of discussion in the previous panel around community and community to trust, and of course, depending on the category, the community hooks are quite different. For a fashion lifestyle brand, often it's about the identity of the consumer. A brand like Bewakoof in our portfolio, the community is all about fandom and pop culture. And fandom, which is both global fandom but also regional fandom, and pop culture, which is global to regional. For a brand like Nobero, which is a travel-centric brand for us, the community is around social traveler personas, where travel is fundamentally the reason they spend money on fashion as well. But the community comes together as a travel-centric community. For a brand like Wrong, which is Virat Kohli's brand in our portfolio, the community is all around either Virat as a personality or cricket and IPL and sport as we just recently launched Wrong Active with SRH, where the community is again around fitness enthusiasts, right, or sports enthusiasts. So I think depending on how you look at community, I think in today's world, just basic performance marketing is hygiene. Community building and engagement so that the community truly looks at the brand beyond the product you're selling is, I think, the way brands have to evolve and further innovate. So I think that's the first leg, which of course AI is allowing for you to create a lot more content at scale for you to test with different segments. But just because you have content doesn't mean community happens, right? The association is the second leg, I would say, is hyper personalization and the way the consumer experience is evolving. I think, of course, AI is touching the consumer from all angles possible, all the way to customer support. But can you think about customer experience holistically across D2C, across your offline stores, across every aspect of the touch point with the consumer? There again, we are seeing a lot of innovation. Can the consumer session itself, like, of course, D2C of, let's say, 2015 or 2025 were quite different to where D2C is headed right now. There could be AI in every step of the consumer engagement with you, on your website, on your app, So there again, I think sky is the limit in terms of how much can you hyper-personalize.
Correct.
And also the repeat-led, loyalty-led growth will only happen when you go back to the consumers with something compelling all the time, right? And which again is a bit of a new way to look at CRM or re-engagement or retargeting. The third leg is a little bit on the distribution end, which I think the reason quick commerce has become more mainstream is speed and convenience have become as much a part of the value prop. For example, in our brand, in many cases, we've invested in same-day, next-day delivery across about 40 cities. About 10 cities will have same-day delivery, and we're also piloting a 2-hour delivery model for fashion, right? Of course, larger platforms like Myntra have the ability to build that at scale, but as a house of brands, each brand has to also figure out its way of bringing speed even closer to the consumer's home, along with even things like try and buy, which is a proposition that is quite important for fashion, right? So I think speed is the underlying business model innovation. Quick commerce is the way it's showing up. But we don't think, at least in fashion, all parts of your demand will cater to a 2-hour delivery model. So you've got to be very curated in terms of what is the selection you're offering for the fastest speed, what is the selection you're offering for a same-day delivery, how many cities are you able to cover with that proposition. But fundamentally, across India, speed is getting faster and faster.
Right, right. No, thank you for that. And to touch a little bit on the community side, we've been talking about it since morning, and that's something that AI cannot replace.
Absolutely.
It can help us understand and go deeper in terms of segmentation, etc., and patterns and behaviors. But we really need humans to be sitting on the other side, really advocating.
Yeah, in fact, the amount of offline activation digital first brands are having to do also proves to you that the human touch is not going away.
Absolutely. I'm going to quickly, get to my last question in the interest of time, because I do want to open it up for questions as well. And this is a little bit more from a founder's lens.
Sure.
I'm going to break the question in 2 parts. One is for founders who are building consumer brands today, what separates a good brand from one that is truly scalable, investable, and future ready? And I want you to give answers. The answer that you give to this question has to be that if you had to onboard a brand in tomorrow from this group, what is it that you want to kind of let them understand and take away, in terms of the understanding from what's the criteria to kind of get selected?
Maybe I'll just borrow one from Kawal from the previous panel, and I'll add one which is quite important for us. I think clearly as a founder, we want founders who are very, very sharp on the consumer insight on which they're building the brand around. Even if it's very early, I think you have to have a very sharp thesis around what is a unique consumer insight that you're building the brand around, and does that truly differentiate you in the market, right? Second is, I think the proof point of that is not in terms of just talking to you, right? I think it's often reflected in repeat levels and loyalty-led growth, even at a very small scale. You may have 100 customers, 100,000 customers, or 1 million customers, but at every stage of that journey, there will be signs which tell you that the consumer love is there and the repeats are happening and the consumers are coming back to buy more from you. Of course, some categories are higher repeat, some categories are lower repeat, depending on the nature of what you're buying. But the loyalty and repeat-led growth is supremely important, and that's the only way unit economics eventually will fall in place, right? To the question on 100 crores as a threshold, we don't have a problem with a brand which is smaller than that. But idea is there a scalable PMF which is built on strong unit economics? And my belief is that will only happen when loyalty and retention and repeat are truly happening, right? So that's the core of the, I think, underlying under the hood thing that we look at. Everything else is, I think, boils down to the founder itself and the founder market fit topic that's often spoken about. Yeah. And in fashion, it takes time to understand the category. It's not something that you build overnight. And people who are really passionate about the industry obviously get there faster. For example, I don't claim myself to be a fashionista, but I'm more of a tech and data-led approach to building brands. But I know brand founders of ours who are really passionate about fashion or any other category for that matter. And that shows, right? I mean, that's the reason they're succeeding. At a house of brands level, we bring it all together by saying, look, can you, irrespective of category and brand nuance, still succeed?
Got it. So this is for all you founders out there. Anyone looking to get onboarded on tomorrow, you know what to do and you know who to meet. So on that note, thank you, Prashanth, for being with us.
Thank you.
It's been a wonderful insight. This was my first session ever with so-called House of Brands. We probably keep meeting folks, but I think to understand at a deeper level what you guys do and how you do it. And on that note, we can take about 2 questions.
Hey, hi, Prashanth. So I work at Bliss Club and I'm fairly aware of the fashion ecosystem.
Awesome.
One of the main things that affect a fashion startup or a consumer business is inventory, and that's one of the main reasons why fashion brands end up failing.
Yep.
Now, with the new channel that is emerging in India, quick commerce, how it is there right now, like in fashion, one of the main issues, as you know, is cut size issues.
Yeah.
So one product, one color into number of sizes. With quick commerce coming in into number of dark stores just amplifies the working capital requirements to build success of a fashion business in quick commerce. So do you think that for this particular sector, like fashion and apparel, do you think that there is a possibility of product market fit, which is possible for smaller brands?
Yeah.
Is question number 1. And 2, like if bigger brands are able to do it and that's how the consumer behavior kind of changes, how do small brands adapt with this change? So,
No, so firstly, I absolutely agree with you on the inventory as the
Yeah.
holy grail to succeed in fashion. And it's a very complex category just because of that, right? Because consumers need selection, but you need to build profitably with a focused range that can deliver, right? But to address your question on quick commerce, I think for us, I think from whatever we've learned through the pilots in Bangalore, and 2 of our brands, Bewakoof and Nobero, have gone with 2-hour delivery pilots in Bangalore. I think it's less about demand. Obviously, the consumer would love if there was a 2-hour range and a 30-minute range and a 1-day range, right?
Yeah.
They would absolutely love it. I think it's all about, are you able to very quickly, for example, in Bangalore, we have about 8 superstores to cover all of Bangalore. Idea is to really figure out the curated range that consistently would work across those pin codes and across those dark stores, where both demand density has to play out, but your ability to replenish and refresh the right styles back into the dark store is the only way it will scale. And that's one of the reasons it's still early in fashion compared to groceries of FMCG or other, or even gifting or accessories, maybe is a bit more easy than, let's say, the true selection of fashion being available on the fastest speed, right? But I wouldn't do it personally. I wouldn't do it at a very small scale. You have enough and more other distribution channels to solve for. But the moment you hit let's say 200 crores plus, I think this channel opens up. For example, for us at Bewakoof, 30% of Bangalore demand now on D2C, including the Bewakoof app, is going through the dark store pilot, which is literally in 6 months of launch, getting to 30% is quite impressive, right? So the demand is there. In fact, even before quick commerce, when we did same day delivery, next day delivery, and we brought supply closer to demand, our demand blew up like 10x in markets, right? Like Nobero was a Hyderabad-based brand, but the moment we set up Karnataka and Bangalore as a well-served market, we just grew in those cities and in that state, right? I think supply coming closer to demand and speed being a big source of growth is absolutely proven. The other benefit of quick commerce in fashion is it also reduces returns. So I think the grail problem of returns never going away is definitely one we are seeing as a additional promise. If brands can also crack, try and buy, which right now is more of a marketing spiel than a operational reality, then it becomes even more powerful. But for brands like Bliss Club, we have Nobero in our portfolio, which is similar, where the range is focused and it's not like a super high width range. I think it's much more feasible. But for brands like Bewakoof or Indian Garage, which are like thousands of styles, you've got to figure which styles you want to carry. Right?
Yeah, thank you.
Thank you.
Sorry for the long winding answer, but you hit a inventory nerve there.
Thank you very much. Thank you.
Yeah.
Hey,
Sure.
hi. My name is Pradyun. Just want to follow up on that question. Have you seen a use case where AI can help with taking these decisions on inventory or on the actual operations of the business, or say what sort of new products to launch? Have
No,
you done
absolutely.
any
In fact, one
experiments?
of the core elements of our tech IP and now with agentic AI and Gen AI is really to stitch together that flow, right? From how do you take calls on everything from trend spotting to demand sensing? How do you replenish your bestsellers? How do you figure out what to launch new? But eventually, it all boils down to the performance you're seeing day in, day out, week in, week out. Our entire inventory management approach, including things like pricing and marketing, are designed around that being the. So I think the more you take humans out of the decision making and make it as autopilot as possible, and have humans focus on the creative aspects of the business, right? Marketing is a very creative function. Design is a very creative function. That's where I want my teams to spend more time, not to worry about the inventory pile up, right? I think that's the piece which we are investing in. And as we're going deeper, we're seeing a lot of results, at least at a pilot stage. We want to scale that to even more bigger outcome.
Thank you. Can we give a huge round of applause for Prashanth?
Thanks,
please?
Ritu, and thanks everyone.
And may I please request Ritu to kindly present a small token of gratitude from our side.